All right, today we're diving into a company called SmartChem. Now, they claim to be right at the crossroads of some of the biggest tech trends out there. So, let's unpack that, shall we?
So, right off the bat, here's the big question that our source material throws at us. How in the world can a company valued at just 4 million bucks be mixed up in AI, next-gen displays, and nuclear energy? I mean, seriously, it sounds a little crazy, right? Okay, so our job here is to break this whole story down. We're going to go piece by piece and see if we can put this puzzle together. And you know the drill. Before we jump in, here's a really important disclaimer. This is not financial advice. We're just here to explain the information from our source material to get a handle on the story. You should always do your own homework. All right, section 1, a $4 million mystery. Let's start putting some numbers on the board, because the sheer scale of what we're talking about, well, that's really the core of this whole thing. First up, let's look at the playground they're in. The global semiconductor market, it's barreling towards a mind-boggling $1 trillion in revenue. We're talking about one of the biggest, most important industries on the entire planet. Now, hold that trillion-dollar number in your head and look at this. $4 million. That's the approximate market cap of SmartChem. I mean, the difference in scale here is just staggering. It's an absolute David and Goliath situation. And that's what makes this so interesting. What could possibly explain this tiny company being in such a gigantic arena? Okay, so to even begin to answer that, we've got to get into what SmartChem actually does. Let's dig into their core tech. So it all comes down to this, something called True Flex technology. The key word here is organic semiconductor. Now, don't think of a stiff silicon chip. Instead, picture something more like a high-tech ink that you can literally print onto surfaces at low temperatures. And that is a game changer. Why? Because it means you might not need to build those crazy expensive new factories. The whole idea is to make electronics that can bend, that sip power, but are still super high performance. And this really lays it out perfectly. On one hand, you've got traditional silicon. It's rigid, it's an energy hog, and you need scorching hot temperatures to make it. On the other hand, you have this organic approach from SmartChem, flexible, low power, and made at low temperatures. It's a totally different way of thinking, and it could open up a ton of new doors. So what kind of doors are we talking about? Well, think about the next wave of displays, micro-LEDs, mini-LEDs, those amazing AMOLED screens. But it's not just displays, it's also sensors, logic circuits, basically the building blocks for the future of electronics. They're trying to position themselves as a key supplier for all of it. Okay, so if the tech is the engine, what's the chassis holding it all together? For a small tech company like this, it always boils down to two things: their patents and their people. Let's start with the patents. 138. That's how many granted patents they have, spread across 17 different families. Now, that's not just some random number. In an industry this competitive, that's a fortress, a moat around their technology. And this really hits the nail on the head. For a company at this stage, intellectual property is everything. It's their most valuable asset. It's what gives them a seat at the table when they talk to the big guys. Then you got the people. Because look, a great idea is worthless without great execution. And the CEO, Ian Jenks, has a pretty wild track record. He's credited with growing one NASDAQ company from $300 million to $16 billion. I mean, that's the kind of leadership you want when you're trying to bring brand new tech to market. Okay, so we've got the basics down: the technology, the patents, the team. But none of that really explains the recent buzz around this company. For that, we need to look at two big recent events. And the first one is a real curveball, a sudden move into the nuclear energy space. And check out how fast this all went down. First, a previous deal they had falls apart and the stock takes a hit. But then they end that deal cleanly, no messy penalties. And then, bam, almost out of nowhere, they announced they're looking to acquire a totally different company called Carbonium Core. So you're probably asking, why the sudden pivot? Well, it all comes down to AI. The amount of electricity needed to power AI data centers is just exploding. I mean, look at that chart. It's projected to go through the roof. And that's forcing everyone in tech to find massive, reliable sources of power. And a lot of them are looking straight at nuclear. And this is where Carbonium Core fits in. They make something called nuclear-grade graphite. It's a supercritical material for the next generation of nuclear reactors. And here's the kicker. They're one of the only companies in the US that can actually produce it. In a world where everyone is obsessed with secure supply chains, that is a huge deal. Suddenly, this little company has a potential foothold in a massive strategic growth market. Okay, on to the second big catalyst. This one brings us right back to their original tech. We're talking about taking that flexible semiconductor stuff out of the lab and into the real world. So get this. SmartChem just signed a 12-month deal with a huge global consumer electronics company. And it's a paid deal. They're literally getting paid to prove their concept for next-generation smart wearables. You can't ask for better validation than that, right? A major player is putting their money down to see if this tech is the real deal. And just look at the size of a prize here. The wearables market is already massive at around $98 billion, but it's expected to just about double by 2030. So this partnership isn't just a science project, it gives them a direct line to a piece of that enormous growing pie. Okay, so let's pull all of this together. It's time to weigh the whole story that our source material lays out. Is this company all hype, or could it be a hidden gem? This table does a pretty good job of summing it all up. On the opportunity side, you've got that solid patent portfolio, an experienced CEO, and these two massive potential catalysts, the nuclear deal and the big electronics partnership. But you've got to look at the risk side too. This is a tiny $4 million company. It's trading near its 52-week low. A previous deal already fell through. It's in a super speculative industry, and at the end of the day, it all comes down to whether they can actually execute. And that brings us right back to where we started. So what do you make of it? Is this a hidden opportunity that the market is overlooking, or is it just another wild speculative story in a very risky part of the market? That's the big question our source material leaves us hanging on, and it's definitely something to think about.